Well, good morning, everyone. Hopefully everybody can hear me online and in person. Welcome to the GASB session this year for the higher education update. Thank you all for attending. Today, we're only going to talk about one standard because there's only one big one this year. There's a few other small ones, but there's one big one this year we're going to talk about. And that's GASB 96 related to subscription-based IT arrangements. Hopefully you learned this in our last session, but we will have a few polls today. So the way to access the poll, go to pollev.com. This one's a little different because we have two sessions going on at the same time. So your code is DEAND 222. That's DEAND 222 to join the polls for the GASB session. If you have any questions, email jray@deandorton.com. Our objectives for this session, and this is a short one, so make sure you pay attention, no napping. We're gonna go over the accounting and financial reporting guidance for cloud computing arrangements. We're gonna talk about some examples for financial reporting impacts. We're gonna talk briefly about why this standard exists related to the rise in cloud-based computing and other software subscription arrangements, and kind of talk about why they're increasing in popularity around the country. So we'll dive right in with a poll. Does anyone online or in person have any subscription-based information technology arrangements? And those people saying no, I'm really going to question that you have none. If you have Microsoft, you do have a subscription-based IT arrangement. If you have Adobe, you have a subscription-based IT arrangement. All right. We'll give you another few seconds for everybody to respond. Well, for those who say you don't know, hopefully we'll go over some examples here so you know if you have some subscription-based IT arrangements. For those of you who say no, I think it's time to go back and do a review of all of your contracts one more time to just check on that. And if you're audited, your auditor will probably want you to go back and check on that too. So what is a subscription-based? So what does GASB 96 do to start? And so SPIDA is what you're going to hear it coined as, subscription-based IT arrangement. And the purpose of this statement is to provide guidance on accounting and financial reporting for SPIDAs for government end users, public universities, and any GASB reporting entity. The statement defines what a SPIDA is. It establishes that a SPIDA results in a right to use subscription asset and a corresponding subscription liability. It provides the capitalization criteria for cost incurred related to subscription-based payments, along with implementation costs, and it provides some examples of the footnote disclosures that are going to be required as you adopt SPIDAs. So what is a subscription-based IT arrangement? I will read this just because it's very nuanced, but it's a contract that allows you control of a right to use someone else's software. It could be used alone or in combination with tangible capital assets as specified in the contract for a period of time in an exchange or an exchange-like transaction. Most people are just going to pay money for their IT arrangements, which will be an exchange transaction. And it could be anything from buying software, using some cloud-based software like Intact or NetSuite. It could be your banner software that a lot of public universities use. It could be any number of IT. It could be your Microsoft 365. But it could also be, you're getting a new piece of hardware But to use that hardware, you have to also subscribe to the software that helps run that hardware. And we'll go over some of those nuances later. The term includes the period in which the government or entity has a non-cancelable right to use the underlying IT assets, as well as any options to extend/terminate if it is reasonably certain that you or the vendor will extend/will not terminate that contract. And we'll go over some of those nuances later. In general, if you've got a contract longer than 1 year, you will recognize the right to use subscription asset. It's an intangible type asset, similar to another standard that we'll kind of talk about in a little while, along with a corresponding subscription liability. The subscription liability is super easy to define. It's in essence the present value of subscription payments expected to be made during the term of the contract, discounted either using an interest rate charged by the vendor, which will likely be fairly rare, or your incremental borrowing rate, which hopefully you know or can get from your bank. The asset is slightly harder. So the subscription asset starts with the liability. And then from the liability, you're going to add any payments you may have made to the vendor before commencement of the term. Were there any, things you paid to hold the price? Did you have to pay some form of fee for learning about it, whatever it may be? If you have any implementation costs that are allowed to be capitalized, which we'll go over later, what's allowed and what's not, those will be added to the asset. And then you subtract from it any incentives that you receive from the vendor at the performance. If you're getting something for free or take 10% off, whatever it may be, you would deduct that from the asset. So your expenses on day two, on day one, you recognized an asset and a liability. On day two, you start to incur expenses related to that contract. So in the past, you typically would have recognized an expense over the life of the contract. So if you had a 12-month contract and that 12-month contract cost you $120,000, you would recognize expenses of $10,000 per month. Today, your expenses are going to be made up of two components. One is the amortization discount of the subscription liability. So when you make a payment on that liability, there's a principal component and an interest component. And the other one will be the amortization of the subscription asset over the subscription term. And so you straight line that over the life of the contract. And for those online, if you have any questions, please post them in the Q&A section of your screen. I am monitoring those. For those here in the room, just raise your hand and I'll repeat the question of those on. GASB 96 does provide guidance around SPIDA with multiple components. In essence, if you have multiple components associated with it, whether it's multiple modules, or if you've got one contract with, let's say, Adobe, but you're buying two different products from Adobe, you have to separate the components and analyze the components on a standalone basis. You've got to allocate the contract price between the multiple components of the contract to determine what your assets are. If you have any questions on the new, it can get a little complicated, but if you have any questions, you can call us anytime. There is an exception. There's actually a couple of exceptions, but the first exception is for short-term contracts that have a maximum possible term of 12 months or less. You must include any one-party options to extend. So if you, as the person subscribing to the software, have the option to extend, and the vendor cannot make you extend, that would be a one-party option to extend. And when you're analyzing the life of that contract, you have to include all extension options, regardless of whether or not you plan to take advantage of those. But you also will exclude any cancelable periods that are cancelable by both parties. And we'll talk about that later. That's an important nuance that we will go over in depth because I think it was missed in the previous standard. And then for those short-term contracts, you will recognize expense like you always have over the life of the contract, ratably over the life of using this. The standard also provides some very descriptive information for the disclosure requirements. In the presentation today, I've got some example disclosures that you can use or edit based on your needs for your organization. So let's get into some of the nitty gritty of it. So when do you recognize the assets and liabilities? So if you're a June 30, 2023 year-end entity, this is effective for you right now. It was actually effective for you on July 1, 2022. If you're a September 30, 2023 year-end, it was effective for you on October 1, 2022. If you're a December 31, 2023 year-end, it was effective for you on 1/1/23. So you recognize and measure the assets and liabilities from the subscription-based IT arrangements using the facts and circumstances at the beginning of the fiscal year of implementation. So you're not recognizing everything on June 30, 23. You're recognizing them on July 1, 2023. That's important because you've got to change how you're recognizing things on the income statement. There is a small nuance to that. So you're allowed to, but not required to, include capitalizable outlays associated with the initial implementation stage and the operation and additional implementation stages incurred that may have happened in prior years. So if you have a 10-year agreement to operate an IT software, and it started in, let's say, 2020, you're going to have to recognize something at the beginning of your fiscal 23 year end, the beginning. But you're allowed to not just use the present value of future expected payments in that asset and liability. You're allowed to go back and see, did I have any costs incurred back in 2020 when we first took this on that we can add to the asset? You're not going to touch the liability, but you can add it to the asset. You don't have to, but you are allowed to. So implementation costs. So in the preliminary project stage, you're going to expense everything. That's where you're kind of thinking about which, do we want to buy Adobe, or do we want to buy Microsoft, or do we want to buy Intact, or do we want to buy NetSuite, or do we want to buy something else that I've never heard of, some forecasting tool, whatever it may be. You're still kind of figuring out what you want. All of that is expensed. You're traveling around to conferences to look at softwares or doing demos in different places. All that is expensed. But once you have decided we are moving forward with this subscription-based IT arrangement, you actually get to start capitalizing the cost incurred. You can capitalize internal cost incurred if you've got people devoted to working on this project. But most of the time, and if you're hiring consultants, you can capitalize consultants who are coming in to help you with implementing it. You can capitalize things like data conversion, because that's something that will help for the life of the contract. But you can start to capitalize any of the implementation costs at that point. Now, if it is a short-term contract, like we mentioned earlier, you're not doing an asset or a liability, you do have to expense all of these costs. During the operation and additional implementation stage. So now we're now operating the software, right? We're past the implementation stage. We're now operating the software. But every now and again, we've got to incur some costs, let's say like maintenance. Do we have a help desk for the software? We've got the ability to, maybe we're going to add a small other module that, we didn't have the expense reporting module. So we're going to add the little module. In general, you kind of expense anything after you start using it. You don't start adding to the asset again after you've created the initial asset. There are some exceptions, like if you're implementing a giant module that's very intense and very expensive, you could, that would be an additional implementation stage that will be distinct and unique, and you would probably want to capitalize those. And that's allowed. But in general, once you're using a software, you're going to expense those things. It's kind of one thing that some people are sometimes confused about is training costs, because you would think training costs are, part of adopting a new software, part of the implementation. GASB says they're not. So does GASB, by the way, with certain types of their contracts. Training costs are always expensive. So anytime you've got somebody training your team, helping them learn how to use the software, somebody going to a conference to learn the reporting module, whatever it may be, those things are expensed as income. Other considerations, the subscription term doesn't start until the initial implementation stage is complete. So you may start paying for that software before you're actually using it, right? So you bought a new ERP system. Dean Dorton sells Intact. You bought Intact from this. You start paying for your subscription. But you've got a 60 to 90 day implementation time frame. And you're still paying for Intact, you're paying for us, you're paying for someone else. And then 90 days later, you're like, all right, we're ready to start operating the asset. Well, you don't actually have a SPIDA asset or liability until you start using it in your business. Those first 90 days are costs incurred prior to operation that you can add to the asset, like a prepay in sense. So that would then be part of your asset that gets amortized over the life of the remaining contract. But you don't have a liability until you start using it. I want to make sure that's clear. And I mentioned this earlier, payments made before then are prepayment until commencement, and they get added to the asset. So let's say you're adopting multiple modules. There's a lot of the higher ed ERP systems have multiple modules. You got the student module, the financial module, the HR module. In general, your subscription term begins once the first module or a set of interdependent modules are implemented and are being operated. And so if you're doing a phased implementation of a new software, once you get the first one ready to go and start using it, you now have the whole asset and liability for the whole contract, not for just that piece. The thought pattern there is once you have adopted the software or once you've implemented the first one, there's a pretty unlikely chance you're going to go back and decide not to implement all of the rest of the modules. I got to speed up a little bit because we only have about 10 minutes left and I'm going slow. This is my favorite part. So this is my absolute favorite. So most of my clients right now are working really hard for any new contract they adopt to make sure that both they and the vendor have the right to cancel with a certain short period of notice. It's very easy clause to put in your contracts. We can cancel within 60 days and a vendor, so can you. If you have that clause in your contract, you have a short-term lease, so long as the cancelable period is less than a year. So if it's a lot of the ones I see are 60 days, we give you 60 days notice, or you give us 60 days notice, and we no longer have a contract. That gets you out of having to deal with this accounting. You just get to recognize it as an expense as you normally have. Even if it's a 100-year contract, if you have the option and they have the option, it's not a short-term contract. So life hack for every one of the accountants who wasn't looking forward to this. This one part right here helped one of my colleges and universities get from having to deal with 100 assets or more. I think they're going to have about 8 contracts that they actually have to recognize an asset and liability. If you have any questions about this, please reach out. That's a good life hack for everybody wanting to. And oh, by the way, this also applies to other standards that you may have implemented a year or so ago. So I've mentioned this a few times. This standard might be very similar to standard that had been previously adopted. Which one do you think it is? Let's take a poll. Nobody's answering D. This doesn't sound new to anyone. I thought somebody would pick A. Oh, yes. I don't know who did it, but thank you, C. It is not similar to GASB 89, accounting for interest costs incurred before the end of a construction period. You all got it right. GASB 87, it is very similar. If you're not receiving the poll questions, try refreshing your poll EV. Just remember, the little code is different in this session than in previous sessions. It is pollev.com/DEAND222. And you can see it at the top of this screen right now. All right. So there are some relationships between leases and SPIDA contracts. So one, all SPIDAs generally meet the definition of this. You are leasing an intangible asset in essence. But you also have to think about which standard applies. Is it GASB 87 or GASB 96? So it depends on the underlying asset. So if it's tangible capital assets alone, if you're leasing computers or something you can touch with your hands, that's generally GASB 87. Your leases. If you're leasing the software alone, you don't have anything you can touch. It's all an intangible software. It's GASB 96. But sometimes there are contracts that include both hardware and software. And you've got to really look at what's the breakdown of what you're getting. What are you actually paying for? If you were to get the two things on a standalone selling price, what is making up the bulk? And so if the software component is insignificant compared to the cost of the tangible asset, GASB 87 applies. Otherwise, GASB 96 applies. So if you're really like, I really want this, you know, some kind of software, but the software will only work if you buy this hardware asset. You know, maybe in lab equipment, there's something like that. 98% of the cost or 80% of the cost is related to the software, and 20% or 2% is related to the little asset thing you got to buy to make it work. You're probably going to follow GASB 96. But if you really want to get this new big piece of machinery or this new computer or whatever it may be, but to make it work, you got to have Windows, or you got to have, you know, the software that makes the phones work, or the software that makes this other thing work. You're probably going to follow GASB 87. There's a few things excluded from statement 96. So if you're leasing software from a government, the government is acting as the SPIDA vendor. That is excluded from 96. Contracts that meet the definition of a public-private partnership in 94 is excluded from 96. And perpetual software licenses. And so the best way I can describe a perpetual software license is, you remember when you used to buy Microsoft Office, and they would send you a disk in the mail, and you would load it in your computer, and you would have it forever. That would be a perpetual software license. You never have to talk to Microsoft again. You bought it, you are good to go. So if you have bought a license that will last you in the future, not you having to pay any more for it, you have a perpetual software license, even if you're paying a maintenance contract in the future. Maintenance contracts are not part of the software. You have to assess the cost of your software between the software and the maintenance contract. Maintenance contract is help desk, software. So, put up the top nitty gritty financial statement stuff. I am going to go through this fairly quickly because you all have the slides. I intentionally put a ton of detail in these slides so that you could just copy and paste if you wanted to and edit for your organization. But SPIDAs can be shown separately if you want on the face of the financials and in their own note, or you can put them in capital assets. The liabilities can be shown separately, or they can be shown in your bonds, loans, and other payables area or your debt area on your financials. I'm not going to go through these next few slides because they're simply, like I said, you can copy and paste. You've got to have an adoption footnote that if it's material to your financial statements, you should have an adoption footnote that describes how did the adoption affect our financial statements, and you can put the dollar amounts in there. If it's material to your financial statements, you should also disclose your policy around SPIDAs and short-term SPIDAs. This is a continuation of the policy that you have there. We write long policies, so more on the policy there. I did put in here an example of a capital asset disclosure with it included in capital assets. I know it's probably quite small on your screen, but there's a little green box around where we included it in that. It cannot be shown with leases. It has to be shown separately from leases. And you'll notice on this disclosure, you've got a category for leases and a category for subscription-based IT arrangements. And you do have to roll it forward just like you would a capital asset. If it's material to your financial statements, you should have a footnote. You should include in capital assets some expanded parenthetically disclosures about your subscription-based IT arrangements, what types of arrangements that you're in, along with some of this information related to the liability around what assets do you have and what are your future subscription payments under SPIDA arrangements. These are some continuation of information you would include in that SPIDA disclosure. This is typically in the debt side of things. And then on the long-term liability side, I've provided you an example of where subscriptions will be included in your typical debt and long-term liability footnote. I've already gone through effective dates. So quickly, in 2 minutes, if anybody has any questions, please let me know. I've already kind of talked about why now. Because why now? Because most people aren't buying a lot of they're not buying as much hardware anymore. Or even subscribing to storage services. We're not having actual servers anymore. We're subscribing and putting our stuff on somebody else's server. We're buying, Office 365 is no longer a disk. You're actually getting it from the cloud now. And just about everybody's moving to the cloud. Microsoft is moving to the cloud. All of your email is moving to the cloud. Everything's on the cloud and it's all subscription based. We kind of talked about this as, governments are going to continue to evolve and need better, faster information, which is going to drive you to having to buy more software to move faster. I have a question online from an anonymous attendee. Does GASB 96 apply to online subscriptions for library materials? And the question would be, the answer would likely be maybe. So if you're subscribing to a software that provides library materials, maybe if it's a long-term contract, if you're getting an online subscription for periodicals, likely not, because my guess is those are cancelable very quickly. They're probably short-term contracts that you don't have to renew every year just to get those. But I'm happy to look at the contract with the anonymous attendee to go, but I would think not. This is just a funny thing about how we got to the true cloud all the way back to dinosaur era. And one final poll: which feature of cloud software do you find most appealing? Finally, somebody picked E. That was my favorite. Yeah. Somebody in the room said it's really all of them, which it is. The other one not on here that I like is the ability to work from wherever I want in the world. I don't have to be fixed at my desk. It should have been one of the options here. All right. Any questions, comments, or concerns? I did go 1 minute over. I apologize.